This is Scott Becker with the Becker Business and the Becker Private Equity Podcast. We try and bring you each day 1 to 2 business and market insight episodes. Plus, we often try and bring you an interview from a brilliant business leader. Today's discussion is the Warren Buffett Big Five. So here's the deal, and here's why people watch this so closely. For so many of us, if we would have in a disciplined way built our portfolios to mimic or model the Warren Buffett portfolio, we would have outperformed the index funds, and we probably would have done better than almost all of us have done, probably better than 99% of us have done, investing individually. So we constantly kind of look at what is Warren Buffett investing in? Are there things we should learn from it? And here's the big five that comprise 65% of the Berkshire Hathaway holdings. Of course, Warren Buffett just retired, so it no longer will be the Warren Buffett portfolio. But these are stocks that he held for a good deal of his investing career, at least the last 20, 30 years of it. You've got five. Apple, which is, of course, mega cap company, second or third in market cap. Interesting enough, Buffett has decreased his percentage or his share of holdings in Apple over the last few years as some of the growth has slowed at Apple, but traditionally a big holding of Berkshire and Warren Buffett. The second two, or really the next four, are all also household names. The next company is American Express. American Express is one of those companies, if you went by the old Peter Lynch theory of investing, I'm a constant user of our Amex. We use it for so many things. We love the service of Amex. I probably should have invested in it a long time ago, but Amex and Apple are two of these five that we've not invested in directly. Again, most of my investing is through index funds and through treasury bonds, not in individual stocks. We do invest in some individual stocks, and then we've also got a plethora of real estate and private equity and venture investments, what have you. The third stock and the fourth stock are two stocks that we have invested in directly. These are Bank of America and Coca Cola. We invested in each of these several years ago. I think they've ultimately done fine, not great. I would have been much better off investing in the index fund probably, or investing in tech stocks and putting the money in the Magnificent Seven. But again, Bank of America and Coca Cola are the third and fourth largest holdings. Again, these five holdings make up 65% of the Warren Buffett portfolio. The fifth holding, which is going to get a kick and a surge now with what's going on in the oil world, is Chevron. And again, that's also been a big long-term holding of Warren Buffett's and Berkshire's. Think about Warren Buffett and Berkshire. They're fascinating company. They're now sitting on $360 billion in cash. So they've been careful in how they put that money to work. They make us that are conservative investors feel good about ourselves because they're sitting at so much cash. But in any event, those are the big five: Apple, Amex, Bank of America, Coca Cola, and finally Chevron. We periodically look at Apple and Amex. We're already investors directly in Bank of America and Coca Cola. My guess is I'm better off sticking to the index funds, but hindsight is 2020. If I'd stuck to the Warren Buffett model of investing, I'd be far better off than I am today. Thank you for listening to the Becker Business, the Becker Private Equity Podcast. Please subscribe. Please follow the Becker Private Equity and Business Podcast. Follow us on LinkedIn at Scott Becker or Becker Business Media. In addition, please buy our book, Building Great Businesses, Great Momentum, Overcome Setbacks, and Scale with Confidence. Thank you for listening to the Becker Business and the Becker Private Equity Podcast.